is partner with SS Muthu. Yeah, currently is partner with SS Muthu and Company, predominantly handling tax advisor consulting, and is also a trainer. So he conducts sessions at ICI and also at various industry forums, pre-budget, post-budget. Prior to GST, he had been handling service tax and VAT CST matters. He is also faculty to the NASIN. So he trains the department officers and awaken the Swami Vivekananda quote. So he wants to ensure that the officers are trained sufficiently. He has also been part of our Karnataka State Chartered Accountants and the BCS in some of the RRCs and the group meeting, moderating the various topics. He generally specializes in the area of SEZ, handling SEZs in terms of other areas of the practice, advising on the classification and the valuation related matters. In terms of the professional achievements, he's been part of ICA GST manual, and he also is part of business process reengineering for developing models aligning GST, income tax, and Ind AS compliance. So personally, he loves to play cricket and football. He completed yoga level 2. That is why he's young, fit, always looks like he's still in his 20s. And he won awards in electrician competitions and debates. With this short brief, I introduce Vishalji to all of us. And Vishalji, over to you.
Thank you, Venuji. So once again, welcome all. It is a privilege to be part of such an elite group and also to present. I've been presenting on various forums, but presenting in front of you all is a different feeling. And yes, I thank our group organizers for taking this very onerous task and a humongous responsibility of conducting this knowledge sessions that also regularly every week. And I'm sure we all are thoroughly benefited. I'm at least thoroughly benefited with all the previous sessions. I keep on even reviewing the recordings. And I'm sure very soon we will become a cult in itself. And with this, let me take you to the topic. I request to allow me to share my screen. So as the topic we all know is section 10, composition scheme. And this composition scheme is something which according to me is not very new or very specific to GST. If you see the history, if you see all the other background, what we have in the previous tax laws and even in some current tax laws, we will find that composition is a concept which is basically a necessity so that the administration of tax happens at the grassroots level as well. If we do not have this type of a scheme like composition, there is a very good possibility that a substantial number of people who may be in the unorganized sector, who may not be in the position to maintain proper books and records, and who may not be in position to have meticulous calculations done either by themselves or may have the opportunity to hire a proper consultant, they may either miss out on paying the taxes or they may ultimately end up not paying taxes. So I believe the concept of composition is something which is integral to the success of any taxation law, especially at the grassroots level in smaller cities and in those sectors which are still unorganized and not very much using technology for the purpose of maintaining books and filing the returns. So the broad agenda that we are going to cover in this topic is the concept and ideology, the brief history, then the overview of certain provisions of GST composition, and the case studies which I have tried to craft from the various issues which I could encounter relating to composition. And ultimately, or alongside all these, we'll also be having Q&A. So as we all know, that once you are liable to get registered, the GST law provides you an opportunity to either register under the regular mechanism, whereby you'll be maintaining detailed records, you'll be filing all the monthly returns, annual returns, and also you would be maintaining all the records in detail, charging tax by computing value and applying the correct tax rate on individual item, and also doing the onerous task of taking the input tax credit with all its restrictions and with all its nuances. Against this, for smaller dealers, and as I mentioned at the start, for those people who are in the unorganized sector and for whom it is not practically feasible to maintain the detailed books, for them, an opportunity is given that they can also be part of the taxation regime by opting for the composition mechanism. So basically, what is composition? This I could find out in our own institute's handbook, which was released, and I'm really very happy to share that when I came across this handbook, I was not knowing that there is a handbook specifically on composition. So the first thing that I tried to search in it is the name of somebody from our group. And I was really happy to find Arpit Bhai's name over there as the person who reviewed the entire handbook. So I'll request everybody, whoever is practicing and dealing with composition dealers, though it is a handbook updated up to 2022, but it would be definitely useful even today because all other things except the latest few changes are all incorporated over there in very lucid and elaborate manner. So from there, I got this definition and the concept of composition, which says it is basically a mechanism whereby you pay a sum instead of paying the actual or the larger amount and instead of following all the other obligations. So this is the definition which I could get from the handbook. Now, what I could identify, as I discussed at the start, what is the basic purpose of having this type of a scheme? The purpose is to provide hand-holding to those businesses which are still in the unorganized sector, not able to have detailed recordings of all their transactions. Secondly, it is also providing an opportunity so that you can make your computation in a more easier and a simplified manner. And thirdly, also to provide relaxation from the onerous compliances of maintaining records in detail and also of filing all the returns in detail. So this, I could identify the basic purpose of why composition is there. Now, when I started researching in the history, I could find that the composition is not something new. Even in the VAT regime, this may vary from state to state. We had composition type of a scheme for works contractors. Similarly, in service tax, there were multiple, but the most common one was works contract. If you remember, in both these, that is VAT and service tax, the composition scheme was exactly as what we have today for the real estate. That is, you have to pay a lower rate on your outward supply and you are not eligible to claim input tax credit of your inward items. Similar was the composition scheme under VAT and service tax for works contractors. Interestingly, when I tried to study excise, I also found that there were similar concepts, may not be exactly same. I could find certain notifications which were providing a lower rate of tax to textile sector, again with the condition of not claiming input tax credit. Over there, it is called as SENVAT credit. And interestingly, if you all remember, you all would have studied this at the time of finals, that there was a concept called as a compounded levy scheme, which according to me is a parallel method of computing and paying tax, which was applicable to only certain notified goods manufacturers. Again, when we'll go to the history of composition in GST, you'll find a reference of this compounded levy even in GST. And in fact, the very latest council meeting minutes have specified or made it clear that at least in GST, we are not looking for any such capacity-based taxation, which was there under excise in the compounded levy scheme. Now, interestingly, many of you all who are practicing in income tax, we also have composition in income tax. How? We have the presumptive taxation mechanism under income tax under 44AD for majority of businesses, under 44ADA for all our professional, and under 44A for goods transporters. If you observe, I could find a similarity between the logic and ideology of these sections under income tax with the composition scheme that we have under GST. In fact, if I have to frame some holistic composition provision aligning these various laws, specifically today income tax and GST composition, I would urge to the government that in the next budget or in the next proposals, whatever they are bringing for amending the laws, they should align the income tax 44AD, ADA and AE provisions with our GST composition scheme so that a businessman who has to comply with both the taxes would be at par as far as maintenance of books is concerned and as far as complying with the taxation law is concerned. So it would be easier for them to comply both the laws in the same manner. So very soon, I believe government would also be thinking on the same lines that the turnover required under 44AD, which is presently 2 crores, may be either made 1.5 crore matching with GST composition, or the GST composition turnover may be aligned with the income tax turnover. 44 ADA, which is for professionals, is having the turnover of 50 lakhs, which is the same in case of GST composition for services. Now, let us start with the brief history of composition. So when I was researching on this topic, because when I was allotted this topic, initially, I thought that maybe I would be dealing with all the forms and the compliances, but then I thought that is what is well versed, known to everyone, and there would be many sessions already on that. So I thought that I would try to curate some more details about this particular concept. So I started going through the various GST Council meeting minutes to find out what different things I could get from the minutes. So in the very first council meeting minutes, I found that the first thing that was discussed was that they would not be providing any composition to manufacturers and to service providers. And in the initial stages of the GST law drafting, they had decided only to limit composition for trading entities. However, when the draft or the model GST law was being curated, at that time itself, in the fifth council meeting, they decided that they would extend the scheme even to manufacturers. That is how in our draft law and later on in the final GST law, we got even the manufacturers as one of the beneficiaries of this particular scheme. Further, if you can see in the second part, they also discuss on this aspect that whether there should be a similar composition scheme like the compounded levy scheme under excise, which was the composition scheme under excise for manufacturers, even under GST. So they decided that we will not have any such scheme which is based on capacity, which is equivalent to compounded levy scheme. Rather, we will keep it limited to turnover only, same like GST. So here they took a call, and even in the latest, if I'm not wrong, the 52nd council meeting, they have again reiterated this point that we will not be having any taxation, at least as on date, which will be based on the capacity of production. So for the time being, GST law is not envisaging any composition scheme which is similar to the compounded levy scheme, which was based on factors of production or the capacity of production. So right now, we would be limiting ourselves to taxing only on the basis of turnover, even under the composition scheme. Further, if you go to the draft GST law, over there, the composition was covered under section 9. Interestingly, if you observe this, what I have highlighted earlier, the original composition scheme as drafted in the draft law said that a registered person would have to take permission from the proper officer, and only when he gets the permission, he would be eligible to get into composition scheme. So the original law, the draft law, had proposed for a permission-based composition scheme. However, again, during the discussions on the various proposed sections of the draft law, again, the council in its fifth meeting itself had decided that they will not be making it basis permission, they will be making it basis intimation. So in other words, on the ideology of self-assessment, like how we make our assessment ourselves. So instead of taking permission from the officer for opting or not opting, opting will not be the right word. So instead of taking permission from the officer that whether he allows us composition or not, they have made it on self-assessment basis, whereby we ourselves have to take a call whether we want to get into composition or not. So now the word introduced in the present GST law under section 10 for composition is that the person has to opt. And this option, as we all know, has to be done by intimating on the portal by filing various CMP forms. So this another interesting point I found, that the original law was permission based for composition. However, the final law what we are today following and implementing is intimation based, that is on self-assessment basis. We have to take our own call without seeking any approval from the officer side. Now, after going to the brief history, now let us start analyzing the provisions as to what are the provisions with all its updation, and most importantly, can we highlight, can we identify certain corrections which may have not been identified by the lawmaker, the fitment committee, while they were drafting the law. So here I have tried to identify some of the points which in fact I had myself doubts about when I was reading the GST law right at the start, but I couldn't find the answer. So today maybe I'll get answers even to my queries. So broadly, there are as of now two composition scheme, which is normally referred to as composition for goods, which is under section 10.1, 10.2, which is the original section. And then we have the new composition scheme, which is called as generally the composition for services, which is under 10.2a. But as we all know, now both the schemes allow supply of goods and services both. Yes, 10.1 is majorly for goods with one major service as restaurant. And alongside that, it is allowing provision of other services, but limiting it to 10% of turnover or the amount whichever is higher. Whereas under 10.2a, as we all know, the scheme is allowing supply of either goods, service, or even both without limiting or without putting any criteria on the maximum amount of supply of whether goods or services to be eligible under 10.2a. So 10.1 is majorly for goods with some marginal proportion of services being allowed, whereas 10.2a is a generic and open-ended composition scheme where even a supplier exclusively of goods can opt for if he wishes to, though obviously he'll prefer 10.1, but academically he can even come under 10.2a without any problem. Similarly, a person who is exclusively into service can come under 10.2a, or a person who is having both goods and services both can also come under 10.2a. So basically, 10.1 is broadly or majorly for goods, but 10.2a is an open-ended section allowing anybody to get into composition levy. Now, let us try to analyze and let us try to figure out that is there anything in the law which maybe require our attention and maybe in future require attention even of the council. So broadly, you have the provisions in front of you. Both the provisions I have given in a comparative manner, and I am highlighting only those points where we need to deliberate upon. So now you can see in red on either side that this is an option, and the option is such that it says that it will be, you have to pay in lieu of tax payable by him under subsection 1 of section 9 an amount of tax calculated at such rate as may be specified. Now this originally was not there in the law, not even in the final law which was passed. It was later on introduced as an amendment in the first GST Amendment Act 2018, where prior to the amendment, if you see, instead of in lieu of tax payable by him under subsection 1 of 9, it was only in lieu of tax payable by him. So the reason which was discussed for bringing this particular amendment, that instead of saying only in lieu of tax payable, they further added this particular part which said under subsection 1 of section 9. The reason given for this particular amendment was, and which I also very much agree to, that if you read the original section which only said in lieu of tax payable by him, it would mean that in lieu of all taxes which are required to be paid by a composition dealer under the entire GST law, he has to only pay that 1%. Now, this would have contravened the first part itself of the section where it says that this entire section, even though it overrides all the other provisions, but it is still subject to 9394, which means, and which we all know, that a composition dealer today is liable to pay tax on its inward supplies wherever covered under 93, and if in any case 94, and that also at the normal rates applicable and not at the discounted rate of 1%, 5%, or 6%. So basically, the composition levy originally was having this defect, which was curated in the first amendment itself, whereby they added this particular phrase, which said that under subsection 1 of section 9, which means that this particular 10.1 or 10.2a both will only be overriding the tax payable under 9.1. So only the 9.1 tax is replaced by this 1%, 5%, or 6%. So this is the first important point, which is already corrected in the law. Now, if we proceed, I have some of my questions and queries where I will request all the group members who are present over here to share your views so that we can understand, and if possible, we can find out whether any mistake is still there in the law. Now, if you read both these sections on either side, it says, notwithstanding anything to the contrary contained in this act, but subject to the provisions of subsection 3, 4 of section 9, a registered person whose turnover is this shall be paying this amount instead of the tax payable under 9(1). Now, when I read this particular section, in fact, when I read it at the very beginning also, when we all were reading the GST law for the first time, I had a question in my mind, which still it is unanswered. So I'll request the group to deliberate upon. So my first issue, which still is unanswered, is that if I go to the bare reading of this section, which says that a registered person whose turnover has not exceeded may opt for. So whether even that person who is opting for registration for the first time, which we all know, the forms say, the rules say that even the person who is opting for the registration for the first time will be given an option in the registration REG 01 form itself to take the option of composition, and he can get into composition. But do you think that if the law says a registered person whose turnover is not exceeding, whether this particular language is actually covering a person who is getting registered first time? Yes. I seek views from the group on this, that what you think, that whether this is the true intent or whether I am not reading it correctly, because my interpretation says that this particular language will not allow a new person who is getting registered for the first time to opt for composition scheme. Yes.
Vishal, I think we have to read this registered person along with that aggregate turnover of 75 lakhs or 1.5. So that condition is along with that registered person whose aggregate turnover.
Agreed, sir.
So I think
Agreed,
that
ma'am.
may not be applicable for the new registered person. So I
Okay,
think, yeah.
so what you conclude, ma'am?
I conclude that this registered person has to be read along with that aggregate turnover in the preceding year. So to opt for this composition scheme, your turnover should be up to 1.5 crore. So I think we have to read along with that turnover. That is my reading. So
Okay,
if you're
you need to
applying, so if you, yeah,
so if you're applying even fresh, you will be eligible.
according to me, yes.
Okay, okay. Any further views on this? Any further views?
Vishal, I think only thing they are asking in the form is to whether they will be or opposition, or we to just click on the flag itself. First thing they, I mean, this can be
Raman bhai,
said that
your voice is
after
cracking.
registration.
Raman bhai, your voice is cracking. At least I'm not able to hear it clearly.
Okay, I'll connect. I'll reconnect.
Yeah, yeah.
Vishalji, can we see like this? It is saying registered person. So registered person also includes a person who is registered and paying tax under composition scheme as well. So I am a registered person now under composition scheme, newly registered under composition scheme, and I am liable to pay tax under the reduced rate, provided my turnover in the previous year is less than 75 lakhs or 1.5 crore.
Okay. I'm reading it in a different manner, sir. So that's why I'm saying this is what query I had right from day one. So I'm also not sure whether this holds good, but I thought this is the right forum to discuss on this. So I'm reading it like this, that the law says a registered person whose turnover is below this amount may opt to pay. So when it is saying may opt to pay, it means I am already registered and then I am having this option to pay. This is how I am reading.
Yeah. Hello, Vishal sir.
Yeah.
Yeah. Sir, now if we link this with the effective date of registration, the day on which he is opting it, he is already a registered person, isn't it?
Okay.
See,
Okay.
as far as effective date of registration is concerned, if a
Yeah.
person is applying for voluntary registration, it is the date of grant of registration.
Yeah, so
So
in
the
that,
day
in
on which
fact,
he's
in
opting
fact, this answer I think will change for voluntary and for compulsory. I think for compulsory, what you say will hold good, because by the time he's registered, his effective date has already passed on. It was the day when he crossed that 20 lakhs. But in case of voluntary, it will be only the effective date when he is actually granted the registration certificate.
Correct. So now in either of the cases, let's suppose even if it is voluntary, let's say he's applying for registration today, that is on 18th of November, and is granted the registration on 25th of November. His registration would be effective from 25th of November.
In case of voluntary, right?
Yeah, in case of
Yeah,
voluntary.
yeah.
And he would have opted in for composition scheme from 25th of November. So the day on which he is opting it, he is already a registered person.
Fine. Point taken, sir. I think ma'am was mentioning the same. So, okay, fine. So let us proceed, because this is not
My
such a
thought on
significant
this,
point.
sir.
Please.
If you just compare this section 10 with section 9. Section 9, after it talks about the notification rate, valuation, finally it says that shall be paid by the taxable person. So probably the intention could have been, I believe, to make all the taxable persons covered under section 9. But when it comes to section 10, let us say there is an assessment to a unregistered dealer. So let's say he's a trader. So let us say now he wants to comply. He may want to, of course, go for a composition scheme because the impact of tax is lower. But the intention appears that section 10 does not want to cover a taxable person, but it wants to cover a registered person. And the question whether the registration is first or the eligibility is first is the argument of our if you go by your reading, it is like hen and the egg concept, which one is first. But I think the purpose, I don't think, should have been to say that the initially registered person should be denied with the option of the credit, because only when he starts supplying, that is when he will start he'll get covered under the composition scheme. I think the usage of registered person in section 10 as against taxable person in section 9 could be more to restrict such unregistered dealer who may want to probably get registered to actually get covered under section 9, the regular scheme, rather than under the composition scheme.
Okay, okay. So I understood, sir. Point taken. That this may be the intention, so that once if later on in the time of some scrutiny or something you are caught and you had not already taken registration, but your turnover limit had crossed the 20 lakhs, so now you will not be eligible for opting for composition. You will have to compulsorily get into the regular scheme. I suppose this is what you mean to say, right, sir?
Yes, sir. Yes.
Okay, great. Let me proceed then. Now, in the same amendment, another amendment was also brought into, whereby, as we can see, earlier the language was in lieu of tax payable by him, an amount calculated at such rate he has to pay. But later on, post amendment, the language was an amount of tax calculated at such rate. So another amendment that they curated, again for the reason given, was to remove any interpretational ambiguity. But again, I still have a question that whether this amendment of replacing the word an amount with an amount of tax can have again the repercussions which were not expected or which were not envisaged. So let me take some case study for this. So firstly, as we all know, there is section 33 in the law which says that if there is any amount of tax, it has to be indicated separately in the tax invoice and any other document. So any other document, I'm sure, by the interpretation, if I'm applying over here, should mean any other document under the GST law, which will mean debit note, credit note, and should also mean bill of supply. But this is where I think this is going contrary, and this is where I have this point. So let me give you a case study so that we can deliberate again upon this point, that when they brought in this amendment, when they said that an amount of tax calculated, it means now they are giving that 1%, 5%, 6% a color of tax, which obviously is correct. But whether this amendment again is going to create any other problems, let us try to analyze. So a case study that we are analyzing is that there is a Venu Mega Store. The person is registered as a composition dealer, and during financial year 23-24, he is selling all his goods at MRP, as normally happens in case of any grocery store. So let us say it is a grocery store registered as a composition dealer, and it is selling all its goods at MRP. Now, the question is, the law says that you will be paying an amount of tax, which will be now 1%. So in case of a grocery store, it will be 1. And this now they are saying, instead of 9(1), that is instead of the regular tax at 5, 10, 12, whatever, you will be paying an amount of tax, which is 1%. Now my question is, whether the composition tax is payable on the total sales value, which is at MRP, or while calculating this 1%, it has to be done back calculation, because again, Rule 35 says that wherever there is a tax which is included in your sale value, the calculation has to be done back calculation. Now, MRP already comes with a tag. It says that inclusive of all taxes. And now specifically you have mentioned in 10(1) that this 1% is amount of tax. So now my question is, the first question relating to this, that when a person, a composition dealer who is selling goods at MRP, let us say MRP is 100 rupees, whether he will do 100 multiplied by 1, which actually we all are doing, 100 multiplied by 1, so he has to pay 1, or he will do 100 upon 101 into 1 to find out the amount of tax. Yes. Yes, anybody would like to deliberate on this?
Yeah, I think it should be over the MRP, not inclusive basis, because it is kind of a turnover based taxation which is there. And I think the purpose of MRP as per the Legal Metrology Act is to probably restrict or regulate the maximum price at which the product is sold to the customer. Even here it will still be MRP. Only issue is that since the tax, there is a specific restriction to collect the tax in the context of composition scheme. I don't see any violation of MRP provisions. At the same time, it can't be done on an inclusive basis, because as soon as you do it on an inclusive basis, you have collected the tax from the customer, which will take you out from the composition scheme.
Exactly. So that is where my point is. So I too agree with this, but again, I'm not able to figure out what impact they sought to create when they replace the word "an amount" by the word "an amount of tax." Now, why I'm stressing on this so much? Because if you go to the excise era, even in the excise, in various provisions, like wherever the goods were supplied by 100% EOU, it uses that the EOU will be paying an amount. Similarly, in case of Rule 6 of Senvat Crate rules, where you are reversing the ITC because you are indulging in supply of exempted goods, there were various options given. One of the option was that instead of doing reversal of ITC, you pay an amount which will be calculated at 5%, 6% on the value of exempted goods and service, and that would be considered as compliance of reversal of the Senvat Crate that you have taken on the exempt supplies. Now, again, over there, they have made it very clear that instead of using the word tax, they are using the word amount. Here also originally, maybe they would have drawn the same analogy from excise law, and they originally coined the word "an amount calculated at such rate." Later on, they replace it by the word "amount of tax." So now, whether this particular substitution is creating any further challenges. So one, as we are discussing in case of MRP goods, can we say that the amount of tax, that is 1%, is already included in 100 and you have to do back calculation? I also believe it should not be. Otherwise, it would be contravening the provisions of MRP law also it would be contravening the provisions of composition, because automatically it would be then said that you are collecting that particular tax, and now since you have collected that particular tax, automatically you will be out of the composition scheme. Fine. So there is another question relating to this.
Vishal sir.
Yeah, please.
Yeah, sir. Sir, like my understanding as to why they replace the words of "an amount" by "amount of tax." Let's suppose there's a composition dealer who has opted in and he does not pay the composition tax. Now, under section 73 or under section 74, if a notice has to come, it has to be for any tax which is not paid. So, if the wordings were not that an amount of tax, would that be sufficient enough for the officer to give a notice under section 73?
Exactly. So this is my also understanding why they have come up with this particular amount of tax. Because when I also thought, when this amendment had come, I was trying to analyze what could be the reason. And my answer was also the same, that yes, they would have come up with this particular word "amount of tax" so that they could fit this particular dealer in all the assessment provisions of the GST law, because in all the assessment provisions of the GST law, they are using the word tax only. So I too agree that yes, this is the reason. But now my point is that whether it is going contrary to other provisions, this is what we are trying to analyze. So let us go to the second question in the same case study. Now, the second part is that in order to determine whether the turnover has exceeded the threshold, we check aggregate turnover of the last year. So let us say in the same example of Venu Mega Stores, now in the next year, you have to again check that whether Venu Mega Store will be eligible for composition in the second year also. So for that, you check the turnover of the last year. And again, in the last year, the same value of MRP goods are there. Let us say the total turnover of the last year of these MRP goods is rupees 1 crore 48 lakhs. Now, in this particular case, the question is whether aggregate turnover would be the MRP value or the value excluding GST, because again, as per the definition of aggregate turnover, as we all know, it says that whatever is the amount of central tax, state tax, that has to be excluded while computing the turnover of previous year to decide the eligibility. So again, I agree to the intention of the lawmaker. I too have the same understanding. But I think again, this particular point, can we say that it will now again be creating a problem for this second particular case, that while computing last year's turnover, again, we all are taking the total MRP sales only, that is our turnover. But whether now as per the definition of aggregate turnover, this point will create a problem. Yes, anybody would like to share any views on this?
I think the turnover definition exclude the tax component. No? Like,
Exactly,
because,
that is my point,
yeah,
ma'am. So
that is
now,
what, yeah.
now
Yeah.
whether you'll exclude this 1% while computing last year's turnover, this is my question now.
Yes, according to.
But then, ma'am, if you are saying yes for the second question, then what will be your answer for the first question? Because our answers are contradicting for question 1 and question 2.
See, question 1 is taking a tax component. So what is the value on which we are paying? That is the one aspect. The second aspect is what aggregate turnover should be considered for applying for this composition scheme. So I think the aspects are different in both the issues. So I believe in second issue, because the definition of turnover which they have used for rate computation is for taxable turnover for traders and total turnover for manufacturers. So looking into the difference, I believe that this GST component should be excluded for calculating this turnover. That
Ma'am,
is my
sorry to just check in. I believe it is actually aggregate turnover concept is same for traders and for manufacturers.
Yeah,
What
yeah.
you are saying is correct. That is only when you are computing the tax
Yeah,
liability of the current
correct.
year.
Correct,
So
correct. That
as
is
far
what I'm
as
saying.
So as far as
That
the
is what I'm
last
saying.
year's aggregate turnover is concerned, it is same for everyone.
Correct.
So whether you will exclude this 1% or in some cases 5% or in some cases 6%, this is my question.
No, I'm just trying to link with first issue and second issue. So in
Okay,
first
okay.
issue, we are looking into the turnover concept, because to arrive the rate of tax, we're looking the value which is excluding the taxes. So in the second concept, when you're calculating the aggregate turnover, which includes the taxes, there is no exclusion of taxes as such in the aggregate turnover. So according to you, it should be included, but according to me, it should be excluded, because that will be calculated only after you opt for the scheme, not at the time of applying for the scheme, actually.
Point taken, ma'am. So you mean to say in the second case, while computing the turnover of last year to decide the eligibility of current year, now you'll exclude this 1%, 5%, 6%, correct?
Yes, that is my view.
Okay, fine.
Vishal sir, that
Yes, sir.
1% is any which was not a part of the turnover, right? Even in the previous year. Say for example, my previous year's turnover, aggregate turnover was 1 crore. Let's say it is on MRP itself. And on that 1 crore, I had paid 1%. That 1% is anyways not a part of my turnover, even in the previous year.
So this is now what is, I believe, this amendment of replacing amount with amount of tax is creating this question. So I also agree with what you are saying, but ma'am is also having a counter view that it should be excluded because it is an amount of tax. So this is what I'm saying now.
Excluded is what I'm saying, sir. Let's suppose the turnover was 1 crore and 1% is 1 lakh. So for now, when you're computing the eligibility for the current year, we will be considering 1 crore only, right?
Yes, this is my view. But I think ma'am's view
I
is
think
that
ma'am also
you will
is of
do
the
back
same view.
calculation. Ma'am, did you mean the same, that you will consider entire MRP 1 crore, or did you mean that?
No, I think she's saying, Annapurna ma'am is saying about 99 lakhs.
Yes, this is what I believe. Aurupji, what is your view on this?
My view is I also go with Annapurna ma'am. That's the stand we have taken. In a similar matter,
you all have taken this stand.
we have taken the stand.
Oh, great. So I think this will create a bigger difference in case of service providers, because over there 6% can create a big difference between coming into or getting out of the composition list.
In fact, my matter is a service provider only, and IR.
Okay, great. Sir, I've even considered one more case relatable to you.
Vishal,
Maybe...
can I come in, please?
Please, sir, please.
Yes, sir.
So, the definition of aggregate turnover, it says that the turnover it means the aggregate view of all taxable supplies, but excludes the central tax, state tax, etc. Okay. Now, this aggregate turnover in the Act is used, or in the rules also is used at different stages. One of them is the threshold for registration. So till a person is registered, does that turnover include the amount of tax? Is he liable to collect tax, or is he liable to pay tax? So there is no question of excluding the taxes for such a person. For a person who is already registered, Let's say somebody is already registered, he is having a turnover of 40 lakhs rupees. Now he wishes to opt for composition. Then when he gets, then the 1% is to be excluded. But if he is not registered, applying for a fresh registration, then tax is not for him. Then the MRP sales which he was making, that was there. That will be my view.
Yeah, so now this is again one more addition to this, that how we are going to look at this particular question. One, for a freshly person who is getting registered for the first time, obviously whatever his sales were there in the previous year cannot be said to be including any taxes, whether 1% or the original rate of 12 or 18%. So this I agree to with you,
So,
sir.
Vishalji, it is not only about 1%. Say 1% is only for composition taxpayers. Say somebody's turnover, otherwise, if somebody has to get registered aggregate turnover, do we say that it is 9% or 18%
That's
or
what I'm saying, sir.
12%
That's what
or
I'm saying.
28% tax?
That's what
So
I'm saying. So
tax means the tax chargeable under this act. The person who is not registered, he is not liable to pay any tax. So his
correct.
turnover does not include any tax.
Correct. So that's why I'm saying. So you have added one more angle to this, that this particular point has now two limbs. Who is getting registered for the first time. So for him, neither 1%, neither 18%, nothing would be considered to have been included in his turnover. So his turnover will be taken as his full sales. Right, sir? But for a person who was already registered in the previous year and now in the second year, you are checking his eligibility. For this person, you will have to exclude the tax, for which now we have two views. One view is you will take the entire 1 crore sale as your turnover and not exclude that 1% by back calculation. And the other view, which I think Oruk ji and ma'am also said, that you will exclude that 1%, which I think, sir, your view is also the same. So you have added one more angle, that this will be seen differently in two scenarios.
Based on this, that seller who is not registered, he's not liable to pay tax, he can't collect tax.
Agreed,
That
sir.
amount
Agreed.
which he's charging his customer is not a tax. So what to include? Nothing has been charged or liable to pay or collected as tax.
Agreed, sir. Agreed, sir. So if GST has to be excluded, then at what rate? So I think we have already answered this. So if the person was registered as a composition dealer, then while computing the aggregate turnover to determine his eligibility in the next year, you'll exclude it as per a major view, I can say. And it would be excluded at the rate applicable, which may be 1% or 5% or 6%, right? Let us proceed. Now, let us analyze the definition of turnover, which is very relevant in this particular section. Now, in this particular section, there are two terminologies used. One is aggregate turnover and the other is turnover of state. Within aggregate turnover, one is the definition which we all study as the original definition under section 2 clause E. And the second is something has been specifically excluded, included exclusively for determining the turnover for the purpose of section 10. So let me first take you to the original definition. We all know what is the original definition of aggregate turnover. It means the aggregate value of taxable supplies, which will exclude your RCM on which you are paying tax as a recipient. It will also include exempt supplies. It will include export. It will include interstate sale, everything. And this has to be done on the basis of the PAN. So if you are having multiple registrations under the same PAN, all would be clubbed to determine your aggregate turnover, to determine your eligibility for the purpose of registration, firstly 20 lakhs, then for that 40 lakhs limit of registration, and then later on for even the composition limit and for all other limits, like where you are given an option to pay tax quarterly, where you are given the option not to file 9C. For all those limits, the definition of aggregate turnover is same. It says it will include all your outward supplies, and only thing that is to be excluded is the tax component in the outward supply. Now, when we come to the definition of aggregate turnover for the purpose of composition eligibility, we find there is an explanation 1. This explanation 1 says that for the purpose of computing aggregate turnover, for determining his eligibility to pay tax under this section means entire section 10. So it includes both schemes, the old scheme and the new scheme. It shall include the value of supplies made by such person from the first day of April till the date he becomes liable for registration. So this is more of a clarificatory explanation, because originally when the law had come, people were few people were interpreting this definition of aggregate turnover to count it beyond 20 lakhs. That is from the day when you became liable for registration. So the first thing that is clarified in this explanation is it would not exclude the first 20 lakhs also. So, and that is correct. While determining your liability to register, while determining your liability for composition or for any other purposes, you will include your entire turnover starting from 1st of April, even though you were not liable to pay any tax because you were not registered up to 20 lakhs. So this is clarified that even the first 20 lakhs would be included. And then this amendment, which was brought in, majorly covered this, that for the purpose of determining your eligibility, the value of exempt supply by way of giving loans, advances, where your consideration is interest, this interest will not be considered in your aggregate turnover. So this is something which is exclusively only for the purpose of the composition scheme eligibility. It won't apply when you are applying the definition of aggregate turnover for all other purposes of the act. So this particular specific exclusion is limited only for section 10 applicability. Now, interestingly, when I was going through all the details of this, I found that this particular point of excluding interest was introduced in between. So it was not there originally in the law, but originally when they introduced it, it was first introduced, as you can say, by ROD number 1 dated 13th of October 2017. If you all remember, it is the same date when we had 9-4 being deferred for some time. So on similar date, we have this ROD, and this ROD was so coined that it actually gave another impression. So what it said, it provides that the value of supply of any exempt service, including service by way of extending loans, deposits, etc., will not be included. Now, the intention was only to exclude the value of the interest component to give relief to those small composition dealer who had only supply of goods, only one small item, that is interest, because they were maintaining saving bank account or they were having FDs in the banks. So to even help them be eligible for composition scheme, this particular clarification was issued. However, the language of this clarification was so drafted that it used the word value of supply of any exempt services, including by way of loan, etc. So effectively, the interpretation that was coming out from this particular language was that a person supplying any exempt supply, not only the supply of loan or getting interest, any exempt supply would be eligible for composition of goods, and it would not be counted for the purpose of determining his turnover requirement. This was later on rectified by giving another ROD and also bringing the amendment in the law applicable from 1st of Feb 2019. So this, the amended section which is there from 1st of Feb 2019 is this, and it is also supported by another ROD which overrides this previous ROD. It supersedes this previous ROD. So there is an interim period starting from 13th of October 2017 to 1st of Feb 2019. During this interim period, if the composition dealer is supplying any type of exempt services, any exempt services, he would still be eligible for composition, and also that would not be counted for the purpose of determining his eligibility for composition. However, from 1st of Feb 2019 onwards, it is now only one exempt service that would be excluded in determining his aggregate turnover for the purpose of composition eligibility, and that one exempt service is service of granting loan advances and getting interest. Orup ji.
हाँ विशाल भाई.
हाँ बोलिए.
Sir, if you allow me, can we continue in the next session? As I had mentioned, I have to actually go to another place where I have a session in the afternoon.
No
and
problem.
It will require 3 hours of traveling. So
No problem. And लगता है कि it will take some more time.
Sir, it will take more time because I have many more issues curated in this.
Yeah, we are already 9:55. Yeah.
It's important also to understand these aspects. इसको लेके बात नहीं होता उतना ज़्यादा.
Exactly, sir. Exactly.
So I think with the permission of all
but any specific questions that which we discussed so far, when can we quickly look at them?
Yeah. Maybe we can take up any questions or any pointers
Yeah.
relating to whatever we have discussed. Yes, anybody from the group?
Okay, looks none, but good. Maybe I think over the week we can have a discussion, do thoughts, mark those questions so that next week we can discuss over all of them, including couple of points which I have. The ROD related notifications haven't been withdrawn after the amendment.
True.
So the impact, can I still continue using ROD? Because that is still there, is also something which I thought what will be the repercussion. I'll also think over, and I will also put my questions.
In fact, I have an added question to this, that since it has not been withdrawn, my first question is, can ROD bring an amendment in the original definition provided in the law by specifically saying that it will exclude a particular type of supply when the definition of aggregate turnover has not been amended? So can ROD bring an amendment in the law definition itself?
I think that's a larger question to discuss.
Because I think RODs are originally meant to only provide some compliance related relaxation or remove some, it is over
Some
here
difficulty.
bringing about an amendment in the concept and the definition of the law itself. So is that possible? That is my another added question to Venuji's point.
Yeah.
So I think, Vishalji, let's carry these questions.
Yeah.
And let's
Also, if
put
there are
upon-
added questions, you may share with me so that if by chance it is not covered in my further slides, I would also inculcate it so that we can discuss on all those points in the next session. Maybe the next session we
Surely.
can have for 1.5 hours to cover all the points.
Yeah.
We will try completing it by 10 so that people are planning between 9 to 10, 9 to 10. We'll try.
Perfect.
I'm not saying
Perfect,
that
sir.
we should not, but we'll try.
Sure, sir. Sure, sir.
Yeah.
So thank you, Vishalji. I think
Thank you.
over
It's my
to
pleasure.
Venuji for the vote of thanks, because Arpitji could not join.
Yeah.
Arpitji was
In
supposed
fact,
to give you a vote of thanks, but he could not join.
absolutely, yeah. So RPG is after a long time he has gone on a vacation, and we
Yes.
said we didn't want to disturb you in your vacation. You please have your vacation, and we'll take care of the session. So, but one point is these sessions, like compared to any other sessions, these sessions are definitely intensive and thought provoking. My sincere appreciation to all the speakers, because you guys are also doing so much of research, because you are talking in front of a forum who already takes this subject. So it also brings a lot of effort on you to look at, okay, kya new perspective isme de sakte. I truly respect and appreciate your time and efforts that you made bringing the 5th GST Council meeting, otherwise we wouldn't have touched upon and looked at it. Vishal bhai, thank you so much. And thank you for parking it so that, okay, we don't run over it, miss it, and we go again deeper in the next session. I also request other people who are here, if you can volunteer in taking some of the other sections so that we can schedule. It takes a toll on us also to figure out agle hafte kaun baat karega, kisko bulayenge, all those things. That it is like we will manage the logistics and other things, because it's a mutual benefit of ours, and we are not here to judge who is right, who is good, who is great. It is a mutual learning. And once again, Vishal bhai, thank you so much for taking us this section, which is like a orphaned and अनाथ बच्चा की तरह जो ज़्यादा कोई practice नहीं करते, bringing us light to this section. Thank you so
Sir,
much.
actually, when I was allotted this section by Arup ji, I was also trying to figure out मैं क्या cover करूँ. And as I said at the start, I was trying to first thinking of covering the forms and all. But later on, when I started reading more, I could find out these issues. So thank you for allotting this topic.
Thank you.
Thank you.
Thank you.
Thank you,
all.
everyone.
Have a
And I'll
wonderful
upload
weekend.
the recording by evening.
Yeah.
Thank you all.
Thank you.
Thank you.